Hello, Joyce. Thank you for joining. Joyce from China. We're happy to have you. Hello, everyone, again. Thank you so much for joining. At least I can see quite some number of people are here.
Yes.
So would like to just dive into the session while we're waiting for others to also join. So first of all, I'd like to introduce our speaker for today. Please confirm if you can hear me. Even if you can just drop a thumbs up, I know that you're with me and you can hear me. So our speaker for today is Professor Joseph Nnanna. Please confirm if you're hearing me clearly. You can just drop a thumbs up.
We can hear you, Joy.
Oh, thank you. So our speaker today is Professor Joseph Nnanna. He's here with us. He's an exceptional, experienced economist with 2 decades of experience and comprehensive understanding of economics theory and financial market dynamics, a demonstrated ability in macroeconomics, forecasting, data analysis, and policy making. Strong skill in strategic planning, risk management, and communication to drive business performance. Proven track record influencing organizational direction through insightful economic research and analysis. Please, let's welcome Professor Joseph Nnanna.
Thank you, Joy, for your...
Joseph, please, you have your time now.
All right, thank you so much, Joy. Thank you for having me. And good morning to you all from wherever you're dialing in from. I saw a couple of people who are dialing in from the far places, so I'm happy to be here. I have my co-presenter by the name of Mr. Nabil Adamu. He will be also presenting half of this very detailed presentation. Nabil, go ahead and project the slides and go back to the first slide, please. So let's begin from the top. So the theme and the topic, capital meets innovation, navigating the new frontier of funding and growth. So this topic is quite instructive because we are in a time where, as we know, the traditional funding sources are not necessarily what it used to be, or if you will, the traditional funding sources are beginning to become more and more difficult to actually assess. That said, we are going to present to you a couple of different approaches here, meaning we're going to discuss some of the emerging trends influencing capital flows. We will also dimension some of the key challenges, the funding vehicles that typically will power disruption in innovation. We'll talk about a bit about sustainability and impact investing, which is quite useful in the 21st century against the backdrop of the Sustainable Development Goals. And of course, we'll close with innovation driven leadership, because this, ladies and gentlemen, is quite useful to understand where we are today and where we're going into the future. That said, moving on to the next slide. The broad introduction is essentially we have reached an age where global technology landscape continues to undergo significant shifts because of the technological advancements we've observed currently. These developments, as we know, continue to drive, if you like, there's a notable economist, he's late now, by the name of Joseph Schumpeter, Austrian economist. He coined the phrase creative destruction. And in his era, he was talking about technological advancements moving faster than we could actually imagine. And it's quite instructive today because, as we know, AI or artificial intelligence and generative AI has become commonplace, especially in the workplace. That said, there's a global intensification in terms of competition for AI and what we know as innovation in financial technology or financial services, if you will. And we will also look at the traditional funding models, that is to say, the vanilla equity capital or traditional bank loans or project financing or mezzanine financing, if you will. And all these terminologies, which I know you good folks have heard, we will kind of distill that further to see what makes sense. Ultimately, there's an increasing struggle to essentially accommodate the high risk and long gestation period of innovative projects. If you move to the next slide, here we just briefly discuss the key challenges that is associated with funding and growth. So first of all, disruption in traditional capital models. I already talked about what the traditional capital models look like. So, for example, we know if you go to your microfinance bank or your commercial bank and you try to assess credit, what tends to happen there is they will ask you for a plethora of different conditions and different instruments, whether it's your um, business plan, your collateral, your financial statements, and your different, maybe you might need a guarantor, or if you will. That's a traditional model. But typically, when you see a disruption, what comes to mind these days is financial technology firms, fintechs, OPay, the money points of the world, and so on. These financial technological advancements and these financial services providers now have basically come because they're more nimble. They're easy to access and they're quick to disburse cash to who their clients to meet their clients' needs. So when you think about this, you know the disruption is real. That's why a lot of traditional banks are actually funding fintechs. That way they don't let they get left behind. So it's not inconceivable to see traditional banks funding fintechs. Additionally, the rise in importance of sustainability and ESG considerations. So ESG is environmental, social, and governance. So ESG considerations is if you're quite frankly being more and more conscious about your environment, about the socioeconomic strata, and the governance of your business, then you're more likely to attract more capital to serve your overall growth of your business. So that's why a lot of financiers, whether it's impact investors, venture capitalists, private equity firms, multilateral agencies, they're more inclined to give you funding when you are, if you will, conscious about your ESG. Another number three here is another challenge associated with funding and growth is a misalignment between innovation goals and funding structures. Can you imagine going to a bank and saying you want a loan for agriculture, but the bank doesn't necessarily know what part of the agricultural value chain you play in, or what type of funding construct you require to ensure that there's no misalignment between what you're trying to do vis-a-vis your repayment timelines. And that happens a lot in Nigeria, where we see your bank gives you a loan and automatically within the next 6 months, they say bullet repayment. So they're asking you for principal and interest right back. Meanwhile, you're still building the project. You haven't finished building the project. They want repayment right away. So there's a misalignment in terms of how long it will take you to build the business vis-a-vis time to repay. So those types of conversations need to be had up front. And typically, what we've observed is that um, when you concretely spell out your plans to your bank or to your financier, they will advise you on how to structure these fundings in order for it to make sense for you. So you now see VCs or venture capitalists or PEs, private equity firms, more or less as strategic advisors to you and your business to ensure growth and innovation is baked in from the onset. Number four, gaps in strategic financial decision making. And this is clear. Sometimes we misalign what we know to be the right financial decision vis-a-vis long-term growth versus short-term gain. So these types of misalignment tends to happen when you don't have the right type of leadership or governance or advisors to support you to reach your objective goals. So if you move to the next slide here we're here talking about the emerging innovative trends that's influencing capital flows. And so if you recall in my introductory remarks, I spoke briefly about artificial intelligence or AI. And the type of capital flows we've seen in terms of equity investment in AI is around 124 billion US dollars. That's a lot of money going into AI for equity, not debt. Debt obviously is far more higher than that. But equity, that means people buying into businesses that are investing in AI, that are AI driven, AI powered. That's the type of equity we're seeing. Advanced connectivity, $44 billion. Digital trust and cybersecurity. You cannot say you're running a business or a bank or any type of institution without investing heavily in cybersecurity. We're seeing $77 billion in equity investments in that. We look at renewable energy advancements, that is solar, electric vehicles, types of battery improvements we've observed. These are investments. That's the future. Renewable energy, $2 trillion in terms of investments. Sustainable technology and ESG, $223 billion equity investments. And cloud computing, of course, $80 billion. So the emergence of AI and innovation, whether it's in advanced connectivity, whether it's in renewable energy, as we know. Here in Nigeria, we know that we've seen a lot of businesses, a lot of homes invest in solar energy. And we've even gone from tubular battery to, excuse me, to more advanced batteries, right? And we see this happening we in Nigeria today, we're seeing a lot of electric vehicles too, CNG powered buses, and so on. These are all different variations and permutations of renewable energy advancements. And it might seem very expensive in the beginning, but over time, you can see it's quite affordable. If you move to the next slide, here we're just looking at the role of venture capital, private equity, and of course, digital finance in supporting disruptive innovations. So we put a couple of businesses here to kind of show you the types of private equity or venture capitalists who are actually fueling and disrupting ideas. Recall, in my opening remark, I mentioned the name Joseph Schumpeter. He's a notable economist. Look him up because what he's saying in his era is it played out in his time, but it's actually more so now than ever before. And I say this because innovation is not a bad thing. Innovation is a good thing because if you don't innovate, you become obsolete. So VCs are willing to take risks that traditional lenders may avoid. And that's the truth because they're more nimble, they have more liquidity, and they're more risk takers in terms of funding disruptive ideas. So that's why you see a lot of venture capitalists come into Nigeria now in different ways to fund, whether it's different type of ride sharing apps, or whether it's health tech or ag tech, and so on and so forth, education tech. Accelerating growth. VC funding provides the resources for product development, marketing, of course, and talent acquisition, because they want to make sure they're powering the types of growth to get the types of returns they're looking for. Venture capitalists aren't always looked as good guys, but if you're looking for money and they like your idea, they will support you there. However, there's a drawback with these things because they not only do they come with their money, they come with their vision of what they think the business can look like in the next few years. So they may want to influence and guide the overall architecture and structure of the business. So that's a trade-off. Because some founders these days, they don't want a situation where they lose, if you like, intellectual control, talk less of financial control of their company. And of course, encouraging collaboration and networking. Connecting with the VC, they ultimately connect startups with potential partners who will create more opportunities for collaboration and growth. And that's really important because sometimes we operate in silos. And when we operate in silos, we refuse to see the big picture. Just imagine looking through a peephole. You can only see as far as the peephole can provide you. But if you look without using the people, you begin to see the world in a different way. You begin to see different people who are basically doing similar things that you are without you realizing it. Because you may think you're innovative without you realizing somebody in another part of the world is doing something very similar. And having a VC come in to tell you, oh, we know somebody in Sweden who's doing something similar with you, and I think you guys can have synergy and expand for growth. That's important. And they have that line of sight that you may not have. Next slide here, we're looking at private equity. On the private equity front, they are for scaling and optimizing innovation. So Blackstone, for example, Verod Capital, African Capital Alliance, these are all private equity firms, KKR, all private equity firms that are known for pumping in a lot of equity investments to give businesses, startups the necessary liquidity for growth. So access to capital, for example, operational expertise, strategic guidance, network expansion. PE firms, PE investors tend to have strong industry connections. Ultimately, they do this to leverage in order to form new partnerships for you to enter new markets. So understanding their strengths and weaknesses are always useful in order for you to know what type of PE firm you want to partner with and how you can optimize and scale your respective businesses. And I think my last slide here before I pass it on to my colleague Nabil is on digital finance and fintech innovation. Here, I mentioned fintech in my opening remark because it's quite important. You can't talk about financial innovation, financial technology without talking about online banking, digital payment, virtual currencies, money exchanges, neobanks, open banking, crypto platforms. All of these things speaks to fintechs, and they are actually transforming the financial sector landscape so fast in terms of digitization of financial services, alternative funding platforms such as crowdfunding. And that's actually a big thing now. Even though we know in the olden days, you have people form cooperatives and contribute a small amount of money each month, and the pot goes to one person. And when the person repays and so on, passes on to the next person. That's this crowdfunding in the olden days. It still happens today. But there's a new platform for crowdfunding where you put out your idea, people start investing in you, and so on. That happens online all the time. Um, in the US, there's a company called Lending Tree, I remember once upon a time. What they do is they've created a platform and potential funders come in, they see your credit score, they see how much money you're looking for, they see the interest rate, they put money and you get the money and you start repaying over time. Of course, digital finance. Digital finance is evolving into digital lending, which is disrupting traditional banking. However, there's a risk with digital lending because you don't know the KYC is not really concrete sometimes. But now the central bank has done a lot of work in making sure KYC is entrenched in everything. That's why we've observed as of last week, they've upgraded all these financial technology like the OPAYs, the money points of the world to national standing. So they have national banking licenses now. So to be sure, the way we see financial innovation, financial technology, VC, PE, I assure you, once you key into it, once you get the full broad spectrum, you'll be the wiser because of it. I'll pass it on to my colleague Nabil now to take us on sustainability and impact investing and other aspects of ESG and so on. Thank you for listening. Nabil?
Thank you, Prof. Sorry, I was having a hard time trying to turn on my mic on. So I'll just go
Okay.
back to the to sharing my screen.
Okay.
Continue. Thank you, Prof. Please, can you confirm that you can see my screen?
Yeah, I can see your screen.
Okay, thank you. So I'll talk to us. I'll take the next couple of slides to wrap it up, and I'll start by talking about sustainability and sustainability and impact investing. So what exactly is impact investing? So I mean it's a forward-thinking approach to how we invest. And the reason why I say it's a forward-thinking approach is because it doesn't it differs from the traditional sort of way of doing business where the focus is solely on profitability, right? But with impact investing, it prioritizes both profitability as well as positive outcomes such as ESG, environmental, social, and governance. And what it does is it helps companies. So when you align your financial growth with these ESG principles, right, it tends to attract a great deal of capital. So we have what we call impact capital these days, and these funds tend to come at a slightly or much, depending on what organization, a slightly or much cheaper rate compared to conventional capital, right? Again, like I said, it goes a step forward. It's beyond profitability. It looks at the social and environmental outcomes, as well as financial returns. So if we look at it today on a global scale, there's a lot of emphasis on sustainability, right? So climate change, and a lot of companies are trying as much as possible to align their operations and their investment principles with these ESG factors. So if we look to the right of the the slide, we can see this graph it gives us a summary, right, of the number of impact investment companies or firms that exist, as well as the growth in AUM. So you can see from 2015 to 2024, the number of companies or impact funds has grown almost 2x or more than 2x, right? From 1003 to 2907. And in terms of AUM, we can see how that has skyrocketed, right? Year on year. It's up from $270 billion to 701. So this just further kind of reinforces and tells you the importance of ESG to investors today. So why is capital flowing towards sustainable and impact assets? So one of them is risk management. Investors, particularly institutional investors, are particularly more conscious of risks that are associated with ESG factors. So regulatory fines, reputational damage, as well as long-term impacts of climate change. We've seen instances where oil companies have been fined, right, because of oil spillage, for example. And this is something that a couple of years there wasn't a lot of emphasis in terms of finding oil companies when it comes to pollution. We also know that it can cause reputational damage, right? So as part of ESG, we have things such as gender, for example, right? So if a company, for example, is being perceived to do, or their operations are somehow anti-women, right? Or maybe they're hiring women and they're paying them below minimum wage, for example, that could lead to reputational damage. So these are all the things that ESG kind of guides companies on. Operational performance. Again, I've mentioned about the reputation and regulatory compliance, but also there is growing evidence, and we've seen this in a couple of papers where, it has shown that companies that adhere to ESG practices or have strict ESG principles tend to outperform companies that don't, right? And this is just not on the private capital market, but even on the public market. So we've seen certain companies that have adhered to these ESG principles that tend to outperform their peers, even on the stock exchange. Also, stakeholder capitalism. So stakeholders ranging from customers, employees, communities tend to influence investment decisions, right? And all these stakeholders demand a greater transparency and accountability, because companies that fail to incorporate these ESG risks or principles risk losing their competitive edge. So, again, like I said, there's a lot of emphasis. Investors are looking more towards companies that have these ESG principles and are more interested in investing in companies like that. So for companies that do not align to these ESG principles, they tend to lose out when it comes to crowding in funds. So what exactly are investors looking for when it comes to the funding criteria for sustainability? Well, they want to see clear ESG strategy that aligns with your core business model. They want to see measurable impact metrics. So for example, carbon reduction, if you're a manufacturer, have you been able to invest in new equipment, right, that reduces pollution or that reduces carbon emission, for example? Are you, even as an office, for example, are you reducing your carbon footprint? Are you using less paper? Are you using less electricity? Things like that. How much jobs are you creating? So things that you can actually measure. And then governance structure, of course. So having a solid corporate governance structure, having a board, that, and also maybe potentially like a succession plan, right? As opposed to just having a company where it's one man and, maybe two of his kids that are helping out. There isn't any proper governance. There are no checks and balances. You don't have independent board members, on your board, and there's no clear sort of succession line. And then, of course, they want to see companies that have a long-term focus, right? And not companies that are just focused on short-term profit. So what do we mean by long-term focus? you're not only trying to extract profits, but you're also looking at, the longevity of the business. Okay, so for how long can we sustain this business? How many jobs can we continue to create, or save, basically, while we continue to be in operation? So these are all factors that investors look out for. So in terms of innovation-driven leadership, so how do we build innovation ready organizations, and why is innovation even important to us, right? So we know that we live in a very, very competitive world. Companies are always trying to outdo their competitors and stay ahead. So if your company or your organization doesn't have an innovative culture, right, you can easily sort of be edged out of business, because you won't be able to stay competitive. You won't be able to attract top talent that would help you sort of propel your company or organization to the next level. So here we say embedding innovation into company culture enables agility. We know that agility is very, very important in business, right? Or even to any organization, because things can change easily. There are things that are within your control, perhaps maybe within the company, and there are external things such as government policies or even macroeconomic headwinds that you can't control over, that you don't have control over. So being able to, quickly adapt to those changes would help you stay ahead of the curve. Also, being innovative helps you to be creative in terms of your problem solving, right? As well as staying resilient in uncertain times. So I talked about exogenous factors that could affect your organization, such as, we all know, for example, subsidy was removed a couple of years ago, and a lot of businesses and organizations had to, quickly adapt to that new environment. So we had subsidy removed, cost of operations went up. We also had the exchange rates liberalization. So all those things, if companies are not able to quickly adapt to those changes, you quickly fall out of business. So there's a BCG study conducted in 2023, actually, that shows that companies with strong innovation cultures are 60% more likely to lead in innovation. So what exactly do we mean by having an innovative culture in the workplace? So this means creating an environment that values all voices, right? So you create an environment where people are comfortable speaking. You don't put down people's ideas. You make it known that anybody that has a great idea that can help our organization is more than willing or able to come forward and speak. Also recognizing employees for their efforts and not just their outcomes. So sometimes certain ideas may not necessarily lead to the right outcomes that you're looking for, but it is very important to sort of recognize and encourage employees that have shown that initiative to at least try to solve something, even though they were not successful, but at least the effort counts for something. And if you continue to encourage people like that, the more you encourage people, the more people are able to put themselves forward and help innovate. So cultivate diverse interactions. Again, it's important to have different perspectives, right? So just because, so I'll think of it in an organization setting, for example, maybe it may be an operations problem, right? But somebody that is in the finance team or somebody that is in the research team, for example, could be able to, just, look at it maybe from another angle, or be able to have the ability to think outside the box and help you come up with the solution that is required. I'll give you an example. So something we do here at the Development Bank of Nigeria is we have something we call the Innovation Challenge, right? And the whole essence of the Innovation Challenge is to help where the operations team, for example, is struggling in terms of disbursements. We come up with a challenge based on that. So for example, if we're struggling to to meet our lending youth, our lending target for women, for example, or for youth, we can pose that as a question to the entire organization to say, okay, we want to increase lending to this particular segment. How do we go about it? And everybody from the organization, regardless of whether you're in, HR or admin or, research or treasury, everybody is welcome to sign up for this challenge and come up with their idea. So that helps because you tend to see things from different perspectives. And sometimes when you're more detached in a way from the problem, right, the more you're able to see things differently. Also democratize the idea generation process. So, we all know that organizations have high flyers within teams, right? So, and sometimes managers tend to just have that go-to person that they go to whenever they have a problem or they need something done. But it is important for everybody on the team to have a sense of belonging, right? Everybody needs to feel like they're contributing one way or the other. So when it comes to trying to get innovative ideas, it is always good to throw it out there and allow people to feel like they can be a part of this thing, as opposed to just going to specific people and making those, superstars within the organization. And also you have to invest in everyone's growth. So training and development is very, very important, right? Everybody needs to be seen to have the same level of training. So here on the right side of the graph, this is from BCG, and it just shows the likelihood of innovation success depending on the kind of operating model that your organization is running. So just because you have a strong operating model doesn't necessarily mean that you have a likelihood to succeed when it comes to innovation. We can see that it's just a 35% likelihood. But when you have when you combine those through a strong culture as well as a strong operating model, right? It becomes significantly more likely for you to have innovation success. So we can see that it's 90% compared to 35%. So that's why we have this quote that says the combination of a strong innovation culture. The combination of a strong innovation culture and a lean operating model significantly increases the likelihood of becoming a world-class innovator, which is where all organizations want to be. So how do you structure your organization for capital attraction? Well, you need to have a competitive edge, right? Investors tend to favor businesses that are, durable, that have the potential for longevity, and also have, a uniqueness to them that the competitor cannot easily replicate. Capital allocation. It is also important how you allocate your capital. An investor would want to see or would want to invest in an organization, that has or that approaches capital allocation prudently and they think long term, right? Not somebody that you just give money and the next thing they're just spending indiscriminately and sometimes without even a concrete laid out plan. Discipline is also very important. If you're not disciplined, you won't be able to, and this feeds into a lot of things, right? If you don't have the discipline, you won't be able to sort of, align your operations or the things that you do with your organizational strategy, right? If you don't have the discipline to start things and actually see them through, then investors are not really looking for quitters. They want somebody that is in it for the long haul and has that discipline and the tenacity to keep going. Alignment with company mission. So again, it's very important that whoever is driving this is aligned with whatever the mission of the company is. Investors don't want mission drifts. So if we're giving you money because you want to expand your plant, then we want to make sure that when we give you money, we see steps and efforts that are being done to expand that plan. We don't want a situation, or investors don't want a situation where they give you money and the next thing, for a specific thing, and the next thing you're diverting it into other things. And then, of course, integrate sustainability into your approaches. So we've talked about ESG. We've talked about how ESG is very important to a lot of investors these days. In most cases, like I said, or in some cases, not most cases, in some cases, the stronger your ESG principles, it actually affects your cost of funding, whether you're raising equity or debt, right? And that's why we have this whole sort of niche investment ecosystem, right, called impact investors. And that's one of the major or key things that they look for before they invest in companies or organizations. So what is the role of leadership learning and decision making, right? So most especially executive education programs are designed to cultivate leadership traits that prepare leaders to navigate complex business environments with confidence, right? So again, like I said, the world keeps changing and it's changing fast. We've had, maybe 20 years ago, ESG was not really much of a concern, right? But lately we're seeing more and more push for sustainability practices for companies to adopt ESG principles. Artificial intelligence, for example, some 10 years ago, that wasn't really a thing. But now we're seeing how AI is coming in and is disrupting a lot of things that we're doing. So it's very, very important that leaders continue to learn. It's very, very important that, they continue to put themselves out there and try to understand sort of these new things or new concepts that are coming up, because it's the only way that they can easily adapt to these changes. And if you remember in a few slides back, I talked about this whole concept of agility, right? So companies cannot be static. They have to sort of respond to whatever shocks or external or internal factors that are affecting them, and that can only be done or achieved if you have the right set of leaders within that organization. So to wrap it up, let's take a look at a few things here that would help organizations to be able to successfully adopt to this new frontier of funding and growth, right? So to be able to do that, to be able to achieve that, business leaders must, one, rethink capital strategies to prepare organizations for future capital opportunities. They must integrate innovation, finance, and strategy. This cannot be overemphasized. They need to align their business models with long-term sustainability goals, and they need to invest heavily, I would say, in leadership development, because it all starts from leadership. Without the right leadership, even if you have all the war chests that you need to be able to turn things around within an organization or to set your organization on a particular footing, if you don't have the right leadership, you won't be able to achieve that. So thank you very much for listening. That concludes our presentation for today.
Thank you so much, Mr. Nabil Adamu. That was really insightful. Thank you so much. So if you have any questions, please, now is the time you can ask your questions and he'll be happy to respond. Any questions at all?
Does that mean my presentation or our presentation was very clear then?
I just want to ask, can you hear me? Can you hear me?
Mr. Ruben, we can hear you, but it's not very clear.
Okay, can you hear me now?
Okay.
Yes, we can hear you now. Please go ahead.
Access, have the slide or access the slide for further further learning purpose and and reference purpose. If we can
Yeah,
get the
that's fine.
slide.
I think we should be able to share the slide with you after this presentation. So we'll send it to Joy, and then she can circulate it across.
Yes, thank you for that.
Thank you, sir.
And all right. Please confirm you can hear me. This is Ruben speaking.
Yes, we can hear you.
All right. Thank you, Nabil, Prof, for that powerful presentation. I've learned a lot. But my question is, I can see the presentation was centered around private equities and venture capitals. Looking at it's been driven by policies, by government policies. So I was hoping you would throw more light with regards to our current government policies, macro policies, especially with this new tax law and the impact it has. I'm just thinking. Thank you.
Sorry, can you repeat that? I didn't quite get the question.
Okay, I was saying that it was centered around the presentation was centered around private equities and venture capitals with regards to investment and capital generation. So I was actually considering, or I've been having a lot of thought with regards to the policies, especially in how dynamic the Nigerian economic is and the new policies and the impact. How do we as upcomers navigate through this, as well as navigate through the VCs and the PEs sector? Thank you.
I think we can take the next question, and then I'll just answer both.
Okay, Mr. Nabil, we have a question in the comment section.
Okay.
From Olajumoke. So it says, in this economy, how can we be innovative irrespective of the business we're into?
Okay. Okay, so I'll answer.
Yeah, Mr. Nabil,
these
can you hear
questions.
me? I have a question.
Okay, go ahead, please.
Yeah, I just want to say amazing conversation, amazing presentation from you today. Even before I think I came late, but I have questions regarding private equity and venture capitals. So I mean, over the past 10 years in Nigeria, you have seen a wave of VC and PE money coming in, especially VC coming into businesses without like a moat, especially in the tech sector. So my question is, does DBN have plans to partner with, PE VCs to be able to try to channel capital to more real businesses, especially on the SME scale, real businesses like manufacturing, agric, in textile production, just to be able to see structure, infuse capital, and help them scale to a more reasonable heights. Thank you.
Okay, thank you very much. So I'll start with Ruben's question, which is, how do we navigate government policies? So I'm guessing you're asking this question from, I guess maybe both from the PEVC as well as from your own point as a business, right? So if you remember in my presentation, I mentioned, the ability, let me just go back to the slide here. I mentioned the need for agility, right? Like I mentioned, the world as well as the operating environment is constantly evolving, right? So it's just being able to put yourself in a position where, as these things are changing, you're rapidly adapting to them, because even the VC and the PE companies that are coming, we do have a few local ones, but we also have international ones. But even the local ones tend to raise money externally, right? So they tend to be exposed to, for example, FX risk, right? So it's just all about, positioning yourself, preparing yourself, and equipping yourself, right, with the right level of understanding, with the right level of skills that would allow you to quickly navigate or to quickly pivot, in the event that there are any shocks or external things that are affecting, or that would affect your business. So whether we like it or not, policies would continue to come up. New policies will come in, existing ones would be abolished, but it's your ability to quickly move and adapt to those new changes that would help. And then I hope that answers you. So the second question, which is from the chat box, so how in this economy, how can we be innovative irrespective of the business that we're in? So innovation is not tied strictly to any particular business, right? All businesses need to innovate. If you're not innovating, then it means your business model is not changing. You're not adapting to changing environmental conditions, right? So how can you innovate? Well, you can innovate by making sure that you're constantly aware, right, of events or of what is going on in that particular industry of yours. You also need to be able to I guess in a way have a crystal ball, if I may say that, in the sense that you need to be able to predict, and again, it doesn't have to be 100% accurate, right? It can't even be 100% accurate, but you need to be able to predict how your sector can change over the next couple of years based on what you see today, right? Again, you also have to constantly be aware of what your competitors are doing, right? If your competitor is innovating faster than you are, then whatever it is that you tend to do afterwards, you'll just be playing catch up, right? And if you're unlucky, you may never ever be able to catch up with your competitor. So it has nothing to do with industry. It just has to be with you being aware and knowing fully well everything that you need to know about that particular sector, and just making adjustments and making forecasts and trying as much as you can to predict what you think may happen in the future, right? If it's a new policy that is coming out, before the policy goes into effect, study the policy, try to come up with different scenarios on how you think this might affect your industry, or this might affect you as a business, and begin to put those measures in place, so that when the policy finally or eventually takes effect, you've already positioned yourself, right, to be able to absorb whatever shocks that may come with. Sometimes it's a bit difficult because some of these things come up abruptly. So, but then again, having that ability, being able to having that agility, sorry, and just being able to pivot in times like that is what is going to help you. And then the question on whether DBM plans to channel funds to PEVC. Yes, actually. Without going much into detail, there has been an approval, or there's an approval that was gotten recently, and DBN is actually looking to begin to partner with private equity funds and venture capital funds to push some of our financing towards these businesses. Again, we're not just looking at VCPE, we're also looking at aggregators, for example, right? So if there's an aggregator that gives money to a particular sector, we're also looking to partner with those kind of operators. So to answer your question, yes, there's an approval in place, and things are already heading in that direction. Go ahead, please, Mr. Ayo.
Okay, thank you so much, Nabil. I think you hit the nail on the head regarding that. But the reason why I was asking this is because for new business owners, I mean, business owners are putting that structure, just like you said in your presentation, you spoke about discipline, right? And just being able to have structure in a business. But what we have seen over the past 5 years, and especially now that we're trying to spark an investment cycle in Nigeria, is that we need to make sure that small companies, SMEs that have that structure and are able to attract capital through a defined economic moat can start having this capital and start doing amazing things and start achieving scale with their businesses, right? Because why this is very important is because we see a lot of mismanagement and mishandling, having the VC structure, finding capital from family offices, from HNIs across the world, coming in and investing in quote unquote fintechs. And we have seen 95% of those businesses crash, and neglecting real businesses that actually have real moat, that have achieved growth for some time and are just looking for funds to scale. So, you look at Sahel Capital and the agricultural space. Are we having DPN partner with this VC, partner with these private equity companies, ACA, all these guys, right? And say, okay, these real businesses, how can we try to bring them up to the scalability that they need through funding? Thank you so much.
Okay. Thank you, Mr. Aya, and I totally agree with you. In the last couple of years, there's been a lot of focus on, tech and fintechs, right? And we've kind of ignored, other sectors such as manufacturing or agriculture. But with the way DBN is structured, we're a wholesale lending bank, right? So what that means is we do not interact with these businesses directly. We have to go through financial intermediaries, right? So DBN cannot, for example, set up, a desk, a VC desk or a PE desk, and say that we're going to be investing directly into these companies. No, we have to do it through funds, right? So that is why the only and that is what our we're limited to that. We're restricted by what our license allows us to do. So that is why it has to be a partnership, with these funds. But again, I hear you and I understand where you're coming from. But one thing I also want you to know is that as an organization, we have sort of thematic areas, right? Those are sort of high growth sectors that the bank has identified and is actively trying to push funds into that sector. So I did mention aggregators, right? One of the aggregators that we currently partner with is in the agri space. And that particular organization has drawn money from us, and they're pushing these funds, to farmers, and the agri sector is part of our thematic area. We also have healthcare, we have education, right? So even though we are a wholesale bank, we can't make these investments directly. We're also mindful of what our thematic areas are. And when we're seeking partnerships, we would definitely, look at people that would help us push funds to these thematic areas that we have identified. But it won't just be a case of partnering with the PE firm or a VC fund just for partnering sake. No, they have to demonstrate to us that they can be able to channel these funds into the sectors that we're focused on. I hope that answers your question.
Amazing, Nabil. Thank you so much. Grateful. Thank you so much.
Thank you.
Okay, thank you so much. I believe we've responded to all the questions that have been answered. Because of time, we will not be taking any questions here, but you can as well drop those questions in the comment section. I've dropped a phone number that you can reach out to, so we can definitely respond to you through that means, answering your questions. So thank you so much, Mr. Nabil, for the session. It was really excellent. Thank you so much, and thank you everyone as well. So we'll be diving into our next session, which is
Thank you,
the
Joy. Thank
product
you,
and learning
everyone.
environment. You're welcome, sir. Thank you so much. We do not want to waste any more time. So we'll be welcoming Mr. Habib, who is in here with us right now, to walk us through our learning environment and our products and what it offers us. Mr. Habib, if you're here, please.
Thank you very much, Joy. Good morning, everyone. So my name is Habib Adewala. I act as the Human Resource Business Partner for Now Business School and Academics. Thank you all for being able to join us today. And it was an interesting topic we had. I mean, capital meets innovation. I can see the engagement going on from Ayo Oncho all the way to our facilitator. And I can see that you all have a lot of questions, and then how can we do it step by step to get these things achieved? So, I mean, thank you for coming in. Anyway, there's also an interesting thing that could be added to that. So you understand that as now online, or rather, let me say you understand, let me assume that you're new to this now, or you're new to us, and this might be, we will have some first timers here. So, and now online, what we do is we're a virtual platform for Now University, which means whatever courses that are being handled in Now University are also being handled in Nile Online once those accreditations are in place. We also have an added thing, which is the Executive MBA and the Online MBA. However, the relationship between these two is symbiotic in such a way that the way that we deliver courses in the Now Business School, like you agree with me, with all business schools across the world, has a unique side to it, which means we think outside the box in Now Business School. And when we say think outside the box, what are we referring to? We've added some new buildings, which are unique to our own selling point in terms of how we want learners to learn. Like we've seen here, have people ask real questions on how do I apply? What do I need to do to apply? How do I get these grants? Can you walk me by a step-by-step approach? Which is also the same way that we have built into our curriculum. We have, for instance, we have oil refinery model, which we just concluded. And that oil refinery model takes you through the logistics section, the health section, the health and safety, the administrative processes, and these are all built into our curriculum to show you exactly what you need to do in every situation. So we use that to teach. We show you what it is that you want to learn, then walk you through it, and then we let you come and explain to us what do you understand by what you've just seen or what you've just gone through. At the same time, we also embedded AI integration into our learning. And when I say AI integration, I also mean we have a simulation lab for virtual learning, which means it's all immersive, you know. You step into the ground, you see AI avatars or other students, you ask questions, you make pitch desk, you go through scenarios, real life scenarios in terms of learning. So that's what we've been able to inculcate. At the same time, we also have strategic development courses such as EDPs.
But we cannot do by yourself. You are so you cannot do us any shakara.
Bolanle, we will not do you plenty shakara, but we'll just try as much as possible to say that we want to help students succeed, and we understand real life challenges that everyone faces out there. And we try to put that into our way of allowing people to learn and the way we facilitate and teach. I mentioned earlier that we had a refinery model that we've built, and we've taken students of Executive MBA for what's true. Now we're even visiting for next week or upper week. We are taking our EMBA cohort 2, I believe, to visit the Dangote refinery and show them the physical structure itself. and let them see what they've practiced in the lecture room, and they now translate it to real life situations, have people take them through what exactly it is that works and what doesn't work, and how you can implement what you've learned in the classroom to real life business. And I was mentioning before that we also have executive development programs. Kehinde Olanike, you have a question?
Yes, sir. Good afternoon.
Good
Sorry,
afternoon,
good
please.
morning.
Good
Yeah,
morning.
I wanted to ask, do you have provisions for this as regards online MBA students, or are we just supposed to come to classes and listen and go? Do you have any
Okay, so in terms of
active,
online,
yeah,
in terms of online students, MBA students, like I said, we're also inculcating the simulation, that's the physical simulation, into the curriculum, in which even if you're attending online, the lecturer gets to show you the classroom because the models are in the simulation lab, right? And we have cameras in the simulation lab that would walk you through the process of what the lecturer is trying to show you. So for instance, I'm going to take you through logistics management, right? I would show you the transportation model from offshore, which is what you guys call the rig or escravos, where they dig the oil from below sea level and all that. And then they bring it to mainstream or midstream. And then when they flow, how does the vehicle or the oil pipe transfer that particular product there? And how does it transfer from there to the depots? And how do the depots now take it to the filling stations? We have automated vehicles in the simulation models to move around, and the camera is supposed to immerse you from your own workspace or from your own living room or from your own anywhere that you are virtually to let you get at least a taste of that experience. However, if it's for an executive MBA program, that also functions as an hybrid, in which way we would advise people to come for immersive week session because we also have an immersive week. So what that immersive week does is it brings people who are around or able to attend to come to classrooms and see these models physically and use this virtual reality to understand, oh, this is how it actually feels like in real life rather than just being online. But immersive week would generally just happen maybe once a month or once in 2 months, depending on the kind of program that you subscribe to. I hope that answers your question, Kehinde.
yes, it does. Thank you.
You're welcome. Anyway, so putting all that aside, I also mentioned we have executive development programs. These EDPs are meant to upskill you, get you to understand how things work, business environment. We'll get David, your mic is unmuted. Okay. So we'll get business leaders to come in. I think the last time we had Yomi Fashion was someone muted me by mistake, I guess. Anyway, we had someone like Yomi Fashion come in to, take the class through and share real life experiences in terms of leadership on how things are being run out there, what to expect, what to get, and all that. So that being said, I think I'll leave it to Joy to take us through to the next level. She'll be showing us a short video clip of our facilities and what it looks like. We might not be able to show you the 3D simulations and all that we've built for now because of certain things. I'm sure you understand that for confidentiality's sake and for keeping our own originality, we'll leave some things out of it. But please do enjoy and hear from our cohort holders and all that. Thank you very much. Joy, the volume. Joy, we can't seem to get audio.
Oh, you can't hear it.
Yes, we
Okay.
cannot hear it.
Okay.
So you probably have to start again from the beginning once you fix the audio. No audio yet.
The volume is not clear.
My screen. Yep. Yes, that's fine. So I'm playing it now. Please confirm if you'll be able to hear.
Okay. Up to now. Up to
You still
now.
can't hear.
No, yes.
You need to click on that speaker button beside that your battery, then change the speaker. There you see alternative speaker output.
When sharing, click on include sound.
Yes, please
It will-
give me a minute. I'm trying to see what I can do to make that possible.
The courses as well as the content, the case studies, it fits perfectly well into my schedule for me to be able to handle most of the teachings and the trainings. Coming to this gives 9online gives me an opportunity because of course I'm an executive and it creates an opportunity for me to handle it within my schedule. The courses as well as the content, the case studies, it fits perfectly well into my schedule for me to be able to handle most of the teachings and the trainings.
Coming to this program really opened my eyes to another side of business that I wasn't aware of.
The blend is perfect, from the flexibility to the curriculum, to the faculty, to the cohort, to the ambience, to the pricing.
You need to experience it for yourself to really understand what other people are experiencing. It gives you that flexibility, it gives you that opportunity to meet people that will cost you a lot of money to meet.
I'll just say that in, but then again, if you're lucky. The MBA program has been brilliantly curated such that every component of the program had something unique to offer. And I said to myself privately, I think I'm getting more value from NILE than I paid for. Why are you still considering? NILE offers you a unique opportunity to learn while working. Don't stay too long on the fence. I think you should jump in.
Which one I'm going for is ACTR. I'm not saying CTR.
Thank you so much. So that comes to the end of the video. And sorry about the incident about not hearing clearly. So I want to thank everyone for attending this session. From the video that you watched, those were the testimony from our presently our students in the cohorts. So we have our next cohorts coming in March and by October. So if you're interested, you'd like to register, I dropped the website in the comment section and also dropped some contacts that you can call if you have any inquiries or you'd like a career session advice, or you want to book a session with a specialist for the students recruitment. We'd be happy to receive any inquiries that you may have. Thank you so much for attending this session. Again, we're having another webinar session by next week on the 11th of February. I'm hoping you all get the links to attend that as well. And I'll be sharing the slides with us in the comment section too. So all of us can always come to it and have access to it. If in case you are unable to view it through this means, the contacts I shared in the comment section, please chat it up, say you want to speak to Joy, and I can share the slides with you directly. Thank you again, and have a wonderful rest of the day. See you next week, Wednesday, 11 a.m. Thank you, Grace. Thank you. Thank you, Esther.
Hello, Joy.
Hi.
Yeah, sorry, I don't have access to the chat. Just realized.
Okay. I'll just send you a direct message.
Okay, thank you very much.
Let me send you a direct message so that you can let me know how to reach you.
Thanks.
Okay, you're welcome. Thank you, Tony. Thank you for coming. Thank you, Fabulous. Thank you so much. Thank you, Edmond. Mr. Sheriff, can you hear me?
I can hear
Okay,
you.
please, can you drop a message in the comment section?
I can't even go into the comment section. It
Oh,
says
you
something
said
went
so.
wrong.
Oh, that's true. You
Yeah.
said so. Okay. 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 Let me see. I'm going to call out the WhatsApp number. Do you have a pen with you so you can chat
Yes,
me
I
up
do.
that means? Because I tried to send you a direct message through the Teams and it's obviously not working.
Okay,
Do you
let
have
me
a
just get
pen
the
with you?
number. Yeah, I do.
Okay. Okay, give me a moment. Okay. So if you want to drop a WhatsApp message, you can call this number 091
Okay.
698
Okay.
465
Okay.
84.
All right. Thank you very much.
You're welcome. So I'll be looking forward to seeing your message.
All right. Have a nice day.
And you too, sir. Thank you for coming. Mr. Durojaye Moses. Yes, I'm going to share the slide in the comment section. You can also chat us on the WhatsApp number that we dropped or call that number if you want a direct communication, please.
Okay, I will do that. Thank you very much.
Okay, thank you so much, sir. Thank you for coming. Okay, so we'll call it a day now. Everyone have a beautiful rest of the day. Bye.